Okay, I've been given the go ahead to start. Thank you all for joining in on a Saturday afternoon. We meet again. Today's topic is fairly very simple. We'll just go through, what's happened in the last 1 week, and let's look at what we can do next. Right? Before we go into the webinar, mandatory two slides for me is to show what Milestones to Wealth is all about. Milestones to Wealth is all about. It's a behavior program. It has nothing to do with. It's not a platform that gives you buy and sell recommendation, but it's a behavior program where we ensure to create a savings habit for you based on your risk profile, based on your tolerance, uh, based on your financial condition, and then in turn help you create an investing habit out of it. Right. So how do market cycles work? Market cycles usually work when there is. If you see from this slide, always there is fear, always there is going to be greed, and we have been in that cycle of greed for the last 2.5 years, and now we are paying the brunt for it. So Milestones to Wealth always uh, motivates investors to participate during pessimistic times, and we are going into a very volatile time, right? But market cycles over a long period of time work only from a behavior perspective, uh, from a point of over optimism and over pessimism. And today's scenario is such that we are in a very volatile place. For the next 1 2 months, you would see a lot of volatile movements in the market. And what is Milestones 12 actually going to do? Milestones 12, since it's a behavior model, we always like to participate when there is a boring market. We always like to participate when there is a volatile market. So volatility means yes, you should look to participate. Investors on the program and registered on the program would have gotten a lot of messages, would have gotten a lot of content from our side, would have gotten a lot of interaction from our side over the last 1 week as to what you can do, how you should be going forward in this particular market. And we always look to do a mix of three. It's going to be lump sum, SIP, or step up SIP, depending on what suits you, depending on your financial conditions. Of course, during exciting markets, you would be able to reap the benefits. Now, reap the benefits doesn't mean that it's a sell. Again, it has to do everything with if have you met your goal. Milestones to behavior is always about meeting your goals. It's always about meeting a particular milestone, be it 5 lakh, 10 lakh, 20 lakh, 25 lakhs. And that ultimately goes into fund your particular goals. Right. So reaping the benefits only come in when there is extreme optimism, when things are looking extremely bad, as in rosy good, in terms of valuation, it's bad. But or second, it's only going to be from a point of have you met your particular goal. That's the case, then yes, reaping the benefits is obviously going to come for us in an exciting market. We've had exciting markets going in the last 2 years. Let's see if we're going to have another exciting market for the next 10 years, right? So, start off with a poll. Are you happy with the election outcome? Very simple question. Are you happy with the election outcome? Put in your answers in the chat box. Yes, no. We're getting a mix of yes and no's. Uh, we were leading with no's and now we're leading with yes. The expected one, but no. Okay. Any of you just put in your reasons as to why you are not happy or why you are happy. Many yeses, many no's. Why is it that you're not happy? Why is it that you are happy? Okay, majority not formed. That's one reason. Okay. Wanted to get BJP majority. Okay. Single majority miss. Okay. Okay. You wanted a democracy. Okay. You wanted democracy to win. All right. India cannot do sweeping legislative changes as planned. Okay. Happy because of coalition government. Okay. Country will grow when one party gets majority. Okay. I'm not happy the way Modi was ruling the country. Okay. So a lot of you have said that some of it is more democracy oriented, and the others are that I don't know if it's actually going to make sense now. If you're having we've seen both the cases, coalition government, we've seen single majority parties, the way they work. How are things going to look forward? That's your entire worry all about, right? Policy reform will have to change and have a challenge. Yeah. Okay, so everything is all about uh, we don't know how things are going to be when there's a coalition government. That's your worry. Number two is that yes, I didn't want too much power to go into one hand. I wanted India to be a democratic nation, and India has proved to be a democratic nation. A strong leadership would be missed, which is essential for success of any business or country. In Tamil Nadu, not even one seat captured in BJP. Yeah, in Tamil Nadu, not even one seat captured in BJP, but captured by BJP. Yes. Personally, not impressed with this government, but single majority is important. Okay. Tax is too high for Indian citizens, but not for the 1% individual. All right. No benefit for Tamil Nadu, no BJP. Right. Any other reasons, any other comments that you guys want to shoot? No chance to make new investments. This is why we are here now. No chance to make a new investment. Now we will show you what are the new opportunities that you can actually go out and start investing in. And that's nothing new. So investors who've been on Milestones to Wealth webinars would know what we are talking about from this entire in the entire of the year, right? So let's look at, okay, everybody knows this. Yes, BJP 240. Last time it was 303, and then all the alliances came in. You see TDP, you see JDU. Yes, so I'm not going to spend too much time here, but yes, uh, just just uh, from a comparison perspective, yes, this time, yes, not a big majority that came in. Now there's a coalition government that we have to deal with now. So will things change? Now, all of this is public data. Number one, I've taken from newspapers, I've taken from researchers' reports that have been published outside. So all of this is public data, right? Now, are things going to change? If fiscal consolidation is likely to continue. RBI said that we are not going to, cut out rates, but we are going to shift to a more accommodative stance, which is good. Inflation numbers are expected to be around 4.5%, which is again good for the country. Second, most important part is that GDP estimates are quite high, right? At 7.3%. It's quite high, which is very good. So, what is it that is going to get delayed? Yes, farm farm laws or labor laws, something that is more on agriculture might get delayed. Yes, we've seen this in the past during coalition governments, so that might be a worry. So. Social reforms, disinvestment was a very big role during the Modi government for public sector entities that might get delayed, right? And most importantly, right, curve on certain speculative transactions in F&O segment. That's what Indians need, right? That's what we need right now. So some sort of rationality to come in. I think this result has given a lot of rationality when it comes to investing. Today, you can't go and take a call saying, yeah, just because Modi government has told that we are going to go do this, this stock price is going to go up, or that fund is going to do well. No, there is now a rationality that has come into the picture, and fundamental investing will always prevail. So bottom up investing is always going to prevail, right? So that is one good thing that has happened for everybody. So snap out of things. Now it's time to become rational again, right? We've had 2 or 2.5 years of irrationality that has been taking place. Now it's not going to be investing from here on is not going to be as easy as what it was. Uh, uh, you know, 2 years back, right? So everything is now going to change. So your investing also has to start changing, right? The way you were investing, the way people were, that might take some time, 6 8 months for people to actually, get into line, get into system, backing into think that, yes, I need to think from a more rational perspective. Irrationality cannot prevail anymore. So don't go on to YouTube, don't go on to Twitter, say, yes, this stock because of this particular AP stocks will do extremely well. Chandrababu Naidu stocks will do very well. Modi stocks will do very well. No, please don't fall into that trap. That's not what we want to set for our the standard for our investors on milestones. But that's not the standard that we want to set. Right? Fundamental investing is what we want to set up, and that is what we will do. Right? Behavior-oriented calls is what we will like to do. Right? But more or less, for the upcoming reforms, that doesn't seem to be any change or any back footing when it comes to uh, more reforms or more policies to get created, the existing policies that are there. So nothing seems like that it's going to be a problem. The only problem that might come up is somewhere on the agriculture, somewhere on social reforms. So let's see how that actually starts taking place. We have a good 1 more month for the budget to take place. So let's see how things are actually looking place. Right? We don't know who's going to come up in which ministry, who's going to start hitting things. So only when we start getting that sort of direction is when again we will reconvene. Again, we will say, okay, what is it that we can do from here on? Right. The entire idea of Milestones2Wealth is yes to give out that sort of knowledge to investors to help them start getting better and help them to take better decisions with their saving, right? So that Indian savers start maturing and then we are able to take much more better decisions going forward. Right. So the view for operates also is that CEOs expect the new government to maintain policy continuity despite the results. So I don't think there's any uh, uh, backlog or any backfooting or anything to say roadblock to say something can change or some problem might come up in the future. Doesn't look like it. That's what we are made to see. That's what we're made to believe, right? So all of this is from the newspaper. If you read the newspaper, we would have seen this also, right? So let's see going forward how things are happening. They have uh, given their support to NDA. Nothing seems like it's going to change, but things can change out very fast. So you don't know. So should you be worried about NDA 3.2? Another poll. Another poll. Should you be worried about NDA 3.2? Lost in major places like Maharashtra and UP. Yes. Should you be worried? Somebody said no, yes, no, not much, no, yes, yes, many yeses, no, yes. Still, yes is leading. Yes, yes is leading again. No, no's catching up. Yes, yes, yes with Naidu. See, politics cannot be your uh, only direction to make decisions, right? If you stick to only politics, then you are bound to go haywire everywhere else. If you would have seen Shamsur's videos also that he has been posting in the Tamil platform called Mudle Kalam, there also it's very clear as to he has been also talking about how in the past when investors have actually gone and followed only politics results, then they are going to be in that place to witness a sort of setback, right? Because there things are changing extremely fast. You cannot predict. Plus, we don't have the right information also, right? As a retail investor, you might not have, that much of information, right? But basing it purely on, political sentiments, that definitely is going to give you some sort of a setback. If you see what happened on Monday, Tuesday, and then what happened the next day, this revival has been too swift, too fast. So yes, there was a bit of overreaction, and there might be a more overreactions that are going to come up because things are going to be extremely volatile, right? There might be more overreactions coming up, right? So that is because we still have to go through that that cycle to say yes, things are changing, my investing needs to change. Once that happens, you will say yes, overreactions start to come down, right? So many of you have said yes, depending on who is in the ministry. Yes, that is something to look out for also. That's why things are going to look extremely volatile. So should investors be concerned? Let's look at what happened in such cases in the past, right? This again is from newspaper, right? So always look to read newspapers. You get a lot of information there. So real GDP during weak coalitions has always suffered, right? But during strong coalition, it has not suffered. We've seen a good 7.5% sort of uh, number coming in for GDP growth, right? Second, policies, right? Is it that coalition governments are slow reformers? Not really. If you look at all cases, right? If you look at a Congress-led alliance or if you look at an NDA-led alliance, things have always looked up. It's not that things have looked up bad. Things have always looked up. Yeah, it's a little difficult to manage personalities in the particular party, but more or less there have not been any particular roadblocks when it comes to big policy reform changes, right? So on account of policy reforms alone, that's what you should be looking for. So I agree with the comments that have been coming on, like depending on who's coming in the ministry, and is there any change in sort of policy. So policies is what you should be looking for, not political sentiment. You should be looking towards policy sentiment, right? So don't go too much towards political sentiments. Policies that what you should be looking for. And in the past we have seen that yes, there have been good policy reforms that have been coming in that have benefited us as a country, and in turn have led to sort of a strong GDP growth in the past. Right now, what has been the consensus view? Now, consensus view has poured money left, right, and center into mid and small caps. If you look at 2020, 21, 22, 23, that 3 years, only money has been flowing into small and mid caps. You look at the number, right? It's astonishing. Just look at this number, right? But from this year onwards, risk has been coming off. And what we have been doing on Milestones to Wealth ever since we started is that we have been on a risk off approach alone. We have been tactical on taking risk, and anybody on the platform would know where we are trying to take that risk, right? But if you look at from a consensus view, if you look at what retail investors have been doing, it's been more on the mid and small cap space. So they are most investors are sort of ahead since January. You've seen a lot of signs coming in saying after the stress test, it became more evident to say yes, there is a lot of problem in the small and mid cap space. There is a lot of crowding in that has been happening in the small and mid cap space. So we should actually stay off. Milestones to Wealth investors have been staying off, yet have delivered that very high return, having a multi-asset sort of an approach for your savings. Right. So risk off is what you should be looking for again. Risk on only in certain sectors that we are going to discuss now, and where you can take that sort of approach. Right. One approach that you can take on risk on is majorly on the large cap space. If you look at sectors and themes also had a tremendous amount of inflow that has been coming in. As risk appetite starts going up, investors are just trying to pour money into risky assets, right? But risk on always has to be now from a tactical approach, and large caps have only been that avenue that have been giving investors more earnings growth and more valuation re-rating growth, right? So earnings growth is what you should be looking for. Increase in profit pools is what you should be looking for. And where is that increase in profit pool going to happen? That's happening currently in large caps, right? Within large caps particularly, it is happening in certain sectors, and that's what you should be looking to do. And that's what we'll cover going forward as well. But risk on only on the large cap space. That's what we have been doing for our investors on Milestones to Wealth. Right, Milestones to Wealth does not want to take much risk unless and until it makes sense for investors to take risk. And we are completely research driven. It's completely based on fundamentals. Right. Only then you can actually get better as a saver. Only then you'll be able to show the right amount of behavior. Right. Now, what is the consensus view going forward? If you see again, this is all brokerage reports. Defense says negative, PSU says negative. So on the previous webinar also, I think I got a question saying what will happen to public sector and what will happen to PSU banks per se, because it was a banking webinar. So we were very clear to say yes, there was a period where you can take that sort of risk, and now is not the time when you can go ahead and start taking that risk, because now things are looking to change, right? So where is it that you can sort of take that risk? Now in the consensus is going more defensive. That's why you saw a rally coming uh, in consumer stocks or consumer space, the entire of that theme. Right? Not that the theme is bad, but you saw that consensus is going a lot more defensive, right? They are going on a much more back footed stance than what retail investors are doing, right? So this view is only based on some sort of fear, some sort of pessimism that has come in to say yes, now we want to take a more defensive stance, and more defensive stance usually means consumer, FMCG, IT, and pharma, right? Everywhere else where they don't have a view, where there is a good amount of risk that they can take, but they do not want to take that risk, they don't want to stick their neck out for that risk, is somewhere on the banking side and somewhere on the automobile side. right? But consensus view is that everybody is now going to be negative towards public sector, which is what is happening now. And second, it's going to more, it's a knee-jerk reaction towards defensive companies. Right? It's a knee-jerk reaction towards defensive companies. Right? Profit pools is what you should be looking for. Increase in profit pools is what you should be looking for. Right. So anytime there is a case like this where we've had, in the past a coalition sort of government and policies reforms that do not come in sectors that were meant to come, that profit pool starts going up because naturally the cost starts going up. Then the cost to operate starts going up. We saw this in roads during the 2004-2009 period, and you might see something very similar happening again in various sectors here. Right. All of this is covered in Shams's video in the Tamil channel. So do go have a look at it. There are three parts of it. It's very, very interesting. It's always a good thing for me also to learn. So naturally, you should also go in and look for it. Right. But going just from a data perspective, a consensus is going more defensive. Right? That's why you're so good at it. Consensus is going more defensive. Right. So where do you think is this next opportunity coming in? This is what we are going to discuss here for. The bar chart indicates good GDP growth is strong. Yeah, naturally you will have sentiments changing, but since we are in a coalition government, we need to look at it from a weak or a strong, right? And during strong coalitions, we've not seen that bad of an impact on GDP of what the expectation usually is. So where do you think the next opportunity is going? Private banking. Okay. Power. Okay. Feel energy, power, and pharma. Okay. Infra, power, banking and financial. Private bank, solar. Private bank, IT, pharma, gold. Okay. So we have done a webinar on gold, and we've done two webinars on gold. I think more than two. So if you just go to Milestones2Wealth YouTube page, and if you go to the live section, you'll know what we are talking on gold. So yes, I do agree with gold as well. But since we are talking more from an equity perspective, we only talk equity. But yes, from a multi-asset perspective, gold and debt also are big opportunities. I have not covered debt in this because I want to cover debt uh, for a good 20-30 minutes. I have covered long-term debt. Again, now short-term debt is becoming very interesting for investors. Again, because we are heading into volatility, so you will see some volatility on the short-term side. So I will cover debt again on short-term. Okay, then there's steel, IT, semiconductors, consumer durables, energy, power, battery. Very, very specific, but overall, I've seen private bank coming in. I have seen uh, infra, and within infra, it's more power driven. Yeah. So yes, I think more or less we are on the right track. So where is it that we are seeing earnings compounding? At the same time, there is a good scope for valuation re-rating, right? If you see from this chart, you're seeing banks, financial services coming in, insurance, pharma coming in, telecom coming in, and then a bit of transportation coming in, right? But majorities of our index, since it's banking and financial services, naturally that happens to be one of the biggest opportunities available to investors, right? And Milestones2Wealth has done two or three webinars on, I think two, on banks and financial services. So I've just taken out the best parts that I felt within that particular presentation. So yes, banks, financial services, you guys are right. Banks and financial services do give out that great opportunity, a big opportunity in terms of profit pool expansion, and in turn leading to valuation re-rating. Right, and investors who are on the platform would have gotten lump sum calls as well, of where that there is a good opportunity now. So if you do have some bonuses, if you do have some sort of extra savings that you've been able to do by yourself, now is a good time for you to start building in this category, right? So banks, next opportunity, yes, we've seen an improvement in non-performing assets. We have also seen, because of that, we have seen an increase in ROEs, and innovation is continuing to happen. So everybody is thriving. It's not that some are thriving and some are not thriving. It's that everybody is sort of thriving in this sort of nation, in this sort of sector. So innovation is happening, and fundamentals have improved drastically. So with respect to that, your valuations have not re-rated that sharply. So yes, there is a good amount of opportunity that investors can take advantage of, right? And since it's milestones to wealth, I told you it's either a lump sum SIP or a step up SIP. So in this case, all the three can work for you, if only if you're on the platform. Otherwise, or only if you're on the program. Otherwise, you don't know what to take advantage of at what time. If you look at it from a market penetration across financial products, India is very low. Right? India credit to GDP is quite low for the next phase of power, right? Infrastructure growth that has to take place. Funding has to go up, and who are going to fund it? It's the banks who are going to fund it. So yes, you would see a good amount of credit growth that's been happening. Credit growth has been extremely strong. So yes, you will see infrastructure also keeping its steam going forward. Right. Again, if you see from a mutual fund perspective, mutual fund AUM to GDP in India is quite low. Insurance again is quite low. So a lot of scope for us. There's an insurance policy that's going to come up now. It's going to open up the entire market. So yes, there are a lot of things that are changing here, and there is a good increase in profit pools for companies to actually take advantage of. So yes, a lot of opportunities coming up here. So if you look at it from a market cap perspective, your banking financial services, the whole pack forms 38% of the profit pool, but is just 26% of the market cap. So good amount of growth, good gap that there is for this entire sector to actually cover up. It's not being given its right brightness in time. So last 10-year profit growth has been 17%. If you look at it, if you look at the top 500 X banking, it's only about 10%. Good amount of opportunity here that the investors can actually take advantage of. Right? If you look at this underperformance, the underperformance is as bad as what it was during your global financial crisis. A lot of negativity is there in this entire space. A lot of sentiment has actually gotten captured here, or negative sentiment. So there's from here on, I don't think there's any negative that can come in this sector. If it does come also, then it's a good place for you to take advantage because earnings is still compounding at a very high rate. Naturally, your ROAs will also start improving, and your ROAs also start improving. Right? From a valuation perspective, yes, the financial services index is trading slightly dated, but yes, it is still trading at a deep discount to your Nifty 50. So there is enough margin of safety for investors to actually go out and take advantage of in this space. Right. So don't expect that this entire thing will change in the next 2 months or so. No, we've been doing this for the last 1.5 years or so, and sort of valuation has not changed that drastically. Right. It's not trading at a premium per se. Right. So this is one option that investors can take advantage of. Next, India's consumption story. Now, in the last 1 week, unfortunately, stance has changed more to defensive, right? But for India to grow at 7 or 8%, your consumption also has to grow at a very strong rate, right? If you look at your nominal GDP also is somewhere around 10-11%, which is very good for India's consumption story, right? As we start earning more, we will start spending more, and as we start spending more, naturally there will be a good increase in our consumption. And then again, this is the entire consumption story that everybody keeps talking about all across the world. Right. So we are at at an inflection point. Right. Our GDP per capita is expected to cross $3,000. Right. So we are at an inflection point. Right. And there is a trend for premiumization. So as we start earning more, we are going to go towards premium products, and it is leading to a big wave in premiumization. You're seeing it in as low as your if you see it in your laundry, yes, you are looking to go beyond. You are trying to buy more premium products. So it's gone down uh, in that entire pyramid. It's still going down, right? So it's gone as deep as what it could, right? Then there is a shift from unorganized to organized. It's growing at a fast pace. The organized side is growing at a fast pace, and then there's digitalization, right? So things have gotten a lot more easier, and things are changing extremely fast. Today, it's 1 minute for us to go out online and start swiping and then order something. And again, it's a premium product that comes to us. We don't mind spending money also on it. And again, it comes up. So everything is working in a cycle. That's why India's consumption is at some point is at that inflection point where it can go beyond $3,000. Right. So if you look at how much India spends, India's FMCG per capita consumption is very low. On average, it's somewhere around 1. Your rural is 1.8. But if you look at the other nations, if you look at Indonesia, it's smaller than India, but they spend more. Like everybody is spending more except us. Or it doesn't reflect as to because of the size of our nation. But this number, even if there's a slight increase in this number, you will see big profits coming in for consumption-oriented companies. Like this is the most important chart, your aspirational India. So if you look at what it was in 2005, 2018, things have been changing, and 2020, what's projected is also changing. Right, you're having a lot of people in the upper middle class and expected to come in into upper middle class, right? That's what is the basis for your premiumization trends. We are the ones who are going to be spending on premiumization. We are aspirational in nature. Naturally, we are going to spend more. We are going to spend more on premium products, right? So this trend continuously is working out, but this won't happen unless and until our country grows. And in this sort of a environment where there is a coalition, but it doesn't seem to be a weak coalition, there's a good amount of support. It does seem that India is poised to grow between 7-7.5%, which is good for us, right? Our inflation is not very high. It's healthy. It's healthy between the 4 plus minus 2 target. So yes, there's nothing fundamentally changing for us, but it's just sentiments that have changed for us. So take advantage of volatility that comes in from the sentiment point of view. Don't miss out sentiment volatility that comes in. And what Milestones2Wealth is doing is we are risk on only in certain parts of the market. We are not risk on in the broader market. So there is enough scope for us to keep on adding for while you participate and keep on adding into safer places of the market. It's not that we are going on in extremely risky parts of the market. We are trying to bat on the front foot. We're not trying to hit a 6 on every ball. It's just a 4. It's just to stick on that crease to get that century, right? To get that target of 1 crore for investors on the program. So we are not risk off. We are risk on, but only in certain parts of the market, right? So you know what certain parts of the market we are trying to go risk on, right? So if you look at from a valuation point of view, yes, it's trading little expensive. So here the approach is in this sort of a market is only one. I will let it open to interpretation as to what it's going to be. You can comment as to what sort of an approach we will be taking on the consumption side. How is it that we are planning to invest on the consumption side? You can just comment below, and then we can have a fruitful discussion. From a Nifty perspective, right? Nifty is still somewhere on the higher side. We have not seen deep correction, but whatever correction is coming in, it is being the appetite for mutual fund investors is high, so naturally they are being capitalized on. But Nifty is trading at a premium valuation compared to the rest of the world. Plus, in history also, it has been trading at a premium valuation. Right now, I'll open the floor for Q&A. We have a good 15 minutes or so for Q&A. So rules of the Q&A, please don't ask me a stock specific question. Anything else is completely fine. Sector specific is okay, just not stock specific question. Can you help differentiate between consumer durables and FMCG? FMCG is just your fast moving consumer, that is your Britannia, your ITC, your HUL. Consumer durables will be everything, you know, your AC, your fridge, your washing machine, everything would come into this. And consumption as a pack, if the entire part also has auto in the picture, right? So consumption as a pact will have everything. Staples are now being defended, so naturally things are more on the defensive side. So yes, view on Nifty. Here's the view on Nifty. Think Nifty is trading at an expensive valuation. Within Nifty, there are certain parts of the market that are cheap. We've covered what is cheap right now on the banking side. That's the only sector that looks to be extremely cheap. Everything else seems to be trading at a premium, not very high premium also, but yes, it is trading at a premium. From a historical perspective, plus if we compare ourselves to other countries, we are trading at a premium. So now the approach does not have to be more on a lump sum side. Now it has to be staggered in. It has to be more from an SIP perspective, no, more from an STP perspective when you want to look towards investing in India. Hit straight. Is it the right time to invest in banking and financial services? If you saw my webinars from the last, couple of months, I've hit straight telling yes. We've given lump sum calls on Milestones to Wealth from a program. Whether I don't know if you're on the program, whether your number is registered or not. But if it's not, just send us a hi, and you will get all the opportunities from our side straight. It will get hit straight to you. Don't worry about that. Hit straight, yes. Can you give a little bit of outlook on pharma and why you think it is a sector to investing? See, I'm waiting to give a proper webinar on pharma. Pharma and infra, I have not given out a webinar yet. That doesn't mean it's not being tracked as a sector, but we have been investors on infrastructure as a house in our PMS. So we have a good outlook on infra and pharma. I'm waiting. If you would have seen how, I think I'll post that also somewhere where we are done on, on the PMS part where we were taking a bold call on auto. While we took that call on auto, from there on, the sector participants that we were investing, the category that we were investing in actually went up from there. So if you look at the trend of when we are doing that particular webinar, you would see that yes, from there on, there has been a lot of action that has taken place in that particular part of the market. So I'm waiting to do a particular outlook on pharma, but from a broad perspective, US is opening up an opportunity because of pricing there. There's no supply coming in. So you will get some sort of growth coming in there. Pharma has been on an expansion mode since COVID and was more so specialty products did extremely well. So that product cycle worked extremely well. But US again is opening up as an opportunity for pharma companies. So I will do a proper webinar for you. Don't worry about it. Just if you're not on the program, just send us a hi. You'll again get onto the program. And if you're following us everywhere, you will get notifications on that particular webinar. But honest, infra and pharma, I'm waiting. Okay. When it comes to financial services, what are also subsectors with respect to opportunity? Where private banking is a good opportunity, insurance is a good opportunity. These are two places, and platform-oriented companies are a good opportunity. Should we book profits and start new? This is not the right behavior itself. If we are looking to do, because Milestones2Wealth is more from a mutual fund side. And when you look to buy a basket, you should only look to buy a basket. Milestones2Wealth is majorly a buy, and then one part of hold. But we have not given a majority sell call right now on Milestones2Wealth. So this platform is meant for you to say, if we have to always do this in out, then we are failing as uh, custodians of your wealth. So that's not the right approach itself for us to take. Do you think this is the right time to invest in transport and logistics? Slightly expensive. Logistics is very interesting, but let's see how things play out right now. After budget. So it will be volatile, but it's an interesting space. It is very good. Insurance company is very bullish. Insurance as a part, since it's a part of financial services, right? You will be able to take advantage of it as you look at the entire basket. Don't try to be very, see, this market is now going to be very difficult for investors to take advantage of because you have to be extremely selective. You're going based on past 2 years returns to now see how things will play out. But things have changed. The game has totally changed. When the game totally changes, it will take some time for you and your mindset also to change, right? So don't look to do stocks. Milestones2Wealth has always done mutual funds and it has worked. So you will see a lot of testimonials also coming in from our side as to how we have been able to take advantage of mutual funds as an entire, investment vehicle. So if you're interested, send us a hi here and we'll look at how we can fit this part based on your risk profile, based on your needs, whether it fits for you or not. Don't try to. This is not a market where you can be very blind now. Very simple. You have to be very very selective, and you cannot put in your money, your savings blindly now. In pharma, following Shamsa's videos, APIs are at all-time highs. So is there any subsector which are good? I mean, you'll know now when I do that. When I do the presentation, you'll know which part of pharma we're actually trying to look at. But wait for it. When the Indian market is trading at a premium than others, should we wait for better time to invest again? Where will you wait to invest at a better time? One day investors got that also we were not able to take advantage of as an entire industry because the platforms failed. 11:30, 12 o'clock, you already saw it, right? It came on the newspaper. So there's no point of you waiting on the sideline. We have never waited on the sideline for our investors. We've always had a staggered in approach. And that's where we come in to say, yes, we will take that approach for you. And that sort of approach works. You know, when to top up, when not to top up. Here, essentially, we are just building a good foundation, and then we are trying to top it up whenever we can based on market volatility. It's not, it has nothing to do with should we wait, should we not wait? No. That you saw that it didn't give you any time at all. And whatever this is has been much on the FOMO side that okay, I missed it, I missed it, I missed it. But here on, you have to have a very rational approach. It's more from a staggered approach perspective. It has nothing to do with, you know, should I time it or not? This time it could be very difficult for you to start timing. Business cycle fund is very good. Actually, since it's open-ended, it takes advantage of all the sectors. So it's actually like a diversified fund only. But their mandate is that they have to take up, you know, some bit of sector. They have to go overweight. Instead of taking from a flexi-cat approach, they for them if they take a thematic approach is very open-ended for them. So that's pretty good. How about recycle and aerospace? Recycle industry has a very bright future, but the valuations are at extremely high levels. So not at all on radar. Will ITOR start reviewing the client mutual fund portfolio SPR or the action return? If the current government economic policies affect the particular fund or portfolio of the client, will the team communicate this to the client and reassess particular fund or portfolio? It's a very good question because I'll tell you how our thought process actually works. When we're looking to do mutual fund investing itself, uh, the PMS business was actually born out of how we were operating in the mutual fund side. We've been operating in the mutual fund side for the last 13 or 14 years, right? And the PMS behavior was born out of it. So the level of research that goes into one stock is the same level of effort and research that goes into reviewing the entire mutual fund. Right. So we look at the behavior of the fund manager to say, yes, what has actually taken, if something has gone right, what has gone right? If something has gone wrong, what has gone wrong? Is that returns comes later, but we first try to question as to why things have happened in that particular manner. What is the behavior that the fund manager has shown? Right. And after that, we get in touch with them to understand, okay, how is it that your thought process has been lined up? How is it lined up right now? Is it in line with what we are thinking also? Right? If it is in line, naturally you would have that in your particular portfolio, right? So in the entire industry, we've been very specific. We have been selective since the start because we understood that in a bullish market, you have to be selective. Yeah, if you go all over, you can do this at the start, but as things start peaking out, then you have to become very, very selective. Right. So the way we were building our mutual fund book also for investors has been from a where do we take that risk on approach? That risk on approach has only been towards contrarian ideas. Now, contrarian ideas happen to be more on the large cap space. So the review comes only when things have peaked out. And for us right now, nothing has actually gone towards a peak. We are only at the start of this particular run up in the cycle, right? But we do review what you have existing just to give you a sense of what has happened. Why is it that your portfolio, you know, has done this, has done that, and just give you a knowledge approach on how you know your portfolio is sort of done and how we are doing it, right? But the team works very hard on each and every individual portfolio. That much I can tell you. Every time we are looking to construct, every time opportunities are made, they're based tailor-made on you. They may tailor-made on you know your financial condition, whether you'll be able to take it or not. So we have this test called the risk test to see how much of you know willingness you have in terms of taking risk and your ability to take risk, whether you have the appetite to take risk or no. You might want to take extreme amount of risk, but you might not have the appetite to sort of weather through that sort of volatility, right? Second most important thing is to have a financial health checkup, right? That essentially is your human life value, right? That sort of gives us an indicator as to when you go to the gym, when you take a full body checkup, you get to know where you have certain problems, and then the doctor sort of gives you some medicine to say, okay, your this level is particularly high. So that financial health checkup gives us an idea of whether you're obese or you're not, right? And then we take that call based on these two particular approaches to say, okay, we've done a lot of research on risky assets, non-risky assets. What is it that can fit for you, right? So that's how we are actually structured here, and a lot of review takes place, right? So again, we did not look to invest based on political sentiments, right? We were only investing based on fundamentals and having a continent sort of approach to be more value oriented, right? So that's what we did. Infra has had a good Infra has run up a lot in the last 1 year. Do you think the trend will continue in the coming years? It's gone up a lot. The valuations are extremely premium. So I don't know whether you might see a normalization or whether this premium is sort of justified. But going by history, usually premium is not justified. Housing finance also included, yeah, but there's nothing great about that particular side of business. But yes, it is included in the financial services sector. Future of logistics companies, uh, there is a good amount of change. We are heading more into express. We are investing more into roads, so that asset will start playing out. These are businesses that are very hard to sort of replicate, and the margins are thin. So the largest plus in businesses that are continuously getting bigger, they have that sort of advantage. So just stick to the big. For insurance, please talk about how to value the insurance companies, the factors that affect the valuation like P ratio, embedded value. Please share your views on when insurance companies become attractive now to invest. The difference between public private insurance companies for the future. This is too much for stocks. I think that uh, stick to mutual fund investing, right? If you're trying to get things right a lot, you will have naturally you will go through a lot of stress and a lot of pain. The mutual fund is already doing your work. You're paying 1.2% or 1.25% as expense ratio, which is already calculated in the NAV for a team of 20 analysts working. And then there is a core team that the investment committee that takes a call for you. And the fund manager has to go to the investment committee to make that particular call. So there's a lot of checks in place. It's highly regulated. So stick to mutual fund investing, stick to that. I can do this. I think we have already done this on the I thought PMS page to talk about banks, talk about insurance companies. So just go on to I thought PMS, go to live, and then you'll have a lot of these sectors that we are talking about. So you'll have a good knowledge when it comes to. We have a good knowledge base when it comes to such sectors. So you can actually go out and look for that. If you're not able to find it, just send us a hi, and we'll help you to do it. But get onto the program first. How to develop a knowledge of defense sector and find companies to invest in, looking at a 5 to 7 year horizon. Again, I'm telling you, you need to stick from a risk on approach only in particular parts of the market. Where valuations have gone up and it is trading at a premium, you cannot take that sort of risk. Right. But just to develop this sort of knowledge, you can go back in time, read a lot about history, read about how the sector sort of developed, read about the cycle, who has influenced that particular cycle, how that cycle has gotten influenced, who was at the wheel, and then you can take that particular call. What is your outlook on mid and small size banks? I mean, larger banks are trading at a much bigger discount than small and mid. So obviously there will be a preference towards larger companies. What are platform companies? Your exchanges. How long will this banking business cycle last on earning side? It's always right. It's a cycle. So we've reached that particular bottom, and you usually cycles take 3 or 4 years to sort of peak out, 6 years at best to peak out, and after that things will start taking place. Are you adding mutual fund to PMS? So Sphere, our multi-asset PMS has that option to invest in mutual funds. There is a good amount of mutual funds there. It's about 4-5% from a domestic standpoint, and another say 8 or something, 7 or 7.5% from a international perspective. So Sphere has that option to take advantage of mutual funds, stocks, ETFs also. There we are not very specific to say where, okay, do we need to take a stock approach or do we need to take a basket approach? When we're bullish on the sector, we take the basket approach. We don't want to be selective, then we can be selective to a basket. So we are taking that sort of basket approach. So Sphere, which is our multi-asset PMS, has that option to go from 0 to 100 in equity. Within equity, we can go 0 to 100 on ETFs, stocks, mutual funds. Debt, we can do 0 to 100 in ETFs or mutual funds. Global, we can do ETFs, mutual funds. Precious metals, we can do ETFs. So equals to 0 to 100 in that. So we are doing it there. Can you please show the opportunity in the sector slide and do a quick recap? Yeah. It's all public data only. So if you see here, right, always uh, things are split up between fair, cheap, cheaper, fair, expensive, and expensive. Milestones to wealth actually starts looking at investing between fair and cheap, cheap to cheaper, right? Now, where is it that things are cheap with the opportunity that the earnings would expand? When the earnings expand, your PE, right? We always look at Screener or anywhere else, you will get price to equity multiple, right? If your E is growing faster, then your PE looks low, right? So we are in a place where the E is growing fast, but the P is not growing fast. So there is a good amount of opportunity for investors to take advantage of these sectors, right? So banks is one place, insurance is one place, pharma, yes, it's coming out to be that particular place. Space, telecom is a good space, right? So wherever right now, right, wherever there is a scope for earnings to grow, that's where investors should actually go out and start looking towards investing, right? Where E has grown and P has grown faster than E. That happens to be majorly on the public sector side. That happens to be more on somewhere between, it's majorly now on public sector, right? Where E has grown, but P has grown faster. Then there are cases in which P and E have not grown that fast also, but there is a good amount of change that can take place both on the upside and on the downside. So there are parts here also. If you see that earnings are compounding, but there is a derating in sort of uh, multiples. Then there is a place where E is also going down because E is also going down, P also is going down. That is a worry. Thoda डर के, be scared for that, right? So this is that particular chart. Textile. Okay, what are the opportunities in the textile sector? Textile sector, we've done a very good webinar. I think Yash, our analyst on for I thought PMS for textile has done a very good webinar. Do look at that on I thought PMS. In capital manufacturing, consuming, which sectors is poised to grow? See, I've already given where we are seeing sort of growth. So banking is one way where we are seeing growth. Consumption, it is a sector that actually gives you that opportunity from a long-term perspective for you to take advantage of. I still have not gotten that reply to that question that I had asked saying, yes, it's an opportunity, but how do we take advantage of that opportunity? Do we stick to a lump sum? Do we stick to SIP or do we stick staggered? I would like to invest in power, telecom, energy sector in the coming years. Is my decision right? My suggestion, please. My suggestion is please stick to a mutual fund. And the mutual fund will take all that approach anyways, right? And it's not that Milestones to Wealth is not taking advantage of this. Yes, we are being able to take advantage of this in one way or the other, right? So my suggestion is that you should look building in more on the mutual fund side. If you're going to be very selective like this, you have to be careful. Thank you so much. Yes. Can we be bullish on insurance? Yes. Do you think gold would continue to raise in coming years? Shall we enter at this level? Gold has been a stellar show, right? Ever since 2018, it's been very good, right? And we've been investors on the gold mining side, and we believe that there is a big shift in currency, right? We don't think that this inflationary environment globally is going to sort of be positive for currency. And anytime such a case arises, you're seeing central banks buying in more and more gold. And when central banks are buying in more and more gold, it's not ETFs, like it's not like how ETFs flows in and flows out. It's not very speculative in nature. It is actual demand, right? So gold is very bullish. So we are very bullish on gold. If you want to know how you want to take advantage of gold, where to take advantage of gold, we've done a webinar on gold, gold mining and silver. So just send us a hi. We'll get in touch with you and we'll be able to do something that works for you. Sugar is bitter. Sugar was very sweet before. Sugar still continues to be slightly sweet. But if you want to play the sugar cycle, you always need to be 2 years ahead. That's what I've understood from my experience of listening to Shamsar as well. When he does a lot of videos online, and uh, that's what I've understood. So don't try to be too complicated. Why is it that investors want to be so complicated? Keep your investing simple. This is not a time to be complicated. This is a time to be extremely simple. Is the textile webinar available on YouTube? Yes, I thought PMS. Yes, it's available. Can we enter into silver ETF now? Depends on your risk profile, depends on your goal. All of these questions that I'm addressing, everything has to do with your risk profile, your and your goal. If you want to know how it actually, whether it fits into your risk profile or not, just send us a hi. We'll be able to help you out to make you understand of whether you can take it or not, and then we'll help you take it. Right, but overall basis, right, we don't want to, if something does not work, then that's not going to happen immediately now, right? We will, like I said, risk on approach is going to be very tactical. What is your CAGR in different PMSs? 1 second. So May numbers will come in maybe in a day or two. That will again get published online. I can tell you for April since inception. So Sphere has an inception date of 16 December 21. Before that, it was a RIA service. That is, it's a multi-asset portfolio. It's a dynamic multi-asset portfolio. Since inception, it has done 24% CAGR, and the multi-asset index has done somewhere around 11.5%. Solitaire, which is our flagship product, which is FlexiCap in nature, that has done since inception. That is the oldest product that was launched in 2019. This is all April data. That was around 27.6% since inception. Right? So that is the CAGR. Neo, which is our multi-asset PMS for foreign investors, right? This is for NRIs. That since inception, that was started a year after our Indian dynamic multi-asset. That has a CAGR of 30.26. Vriddhi, which is our small cap, that has done 33.7% since 2021. That's our exception date. Whereas our large cap also, just give me a minute. Large cap product has done about 12.3%, started in 2020. Right? This is all I'm giving you since inception numbers. When it gets published online, when we start putting it online, you should just follow Shamshar's tweets. He will also tweet it out. You will get our 1 month, 3 month, 6 month, 1 year. One good data point that day was recalculated. Right? Hmm. That day is fall, right? So there was a question internally also. They say, how was uh, I'm reading out the question of the internal team. Somebody from the internal. Hi, what was the fall in the portfolio value yesterday? This was on Tuesday. Versus the benchmark BSE 500 for Solitaire, Riddhi, and Sphere. Right. So Sphere had fallen 3.3%. Our benchmark, which is the NSE multi-asset, had fallen down by 3.3, and Nifty had fallen down by 5.9. True Blue, which is large cap, fell down by 3.6. Nifty 5.9. Uh, BSE 500 fell down 6.68. Solitaire was minus 3.69. So everywhere we have not had that big of a fall on all our products, PMS products as well. Mutual fund very difficult to calculate because Everybody's portfolio is sort of different, but it is around this range only, around 3.5%. Vriddhi fell down, which is the small cap, fell down by minus 4.8%, as 4.9, and small cap index fell down by minus 8. Right. So everywhere across all our products, we have shown strength in this fall. That sort of success only goes to the process where we are taking a staggered approach there also. We don't invest everything on day one. And the sectors that we are investing also are more forward looking, not backward looking. So naturally, that sort of benefited us. It all has to do with our process and how we are managing that particular product. Right. If you are in your 50s and you're able to save 1 lakh per month, what should be the allocation towards equity, MF, and debt? First, stick to MF. SIP means 100% you should do only MF, right? Depending on your goal, it should be based on when you want to retire. If your goal is to retire, when do you want to retire? Okay, that's one question. Second, for your retirement, how much money you need to build so that later every month, what is it that you need to take out? That means you need to do SWP. So to do your SWP, how many years from the day you retire till the day you sort of survive? How many years is that, and how much you have to withdraw? Based on that alone, we will know how much we have to grow. So I would say always stick to MF because that is an investment vehicle that can get the job done, right? This is very important for you to know as to how much I need to save so that I can survive, and how much that can grow so that I can survive. How many years I can survive from there? How many years I can survive from the day I start to retire, right? That's very important for you to know. With you doing 1 lakh SIP, so just get in touch with us. I think I would give you that priority first. Just get in touch with us. That's very important for you to know. And I would say MF. Because your risk appetite is going to change after you retire and you might not be able to take that much of a risk, right? So that time we have to see what your asset allocation should be, how your asset allocation needs to change. The beauty in US is that they have a 401k and they have something called target retirement or target maturity, something that automatically changes the asset allocation irrespective of what your sort of risk profile is. You just put I'm going to retire in say 20 years from now. Automatically after the 15th year, 10th year, 15th year, your asset allocation starts to change. All automatic there. Your 401k is extremely automatic. We want to have this sort of approach here. That's why we are having Sphere as a product, which is somewhat of a proxy to your 401k. That's a dynamic multi-asset product. So we do that. Yes, how will someone and I thought me, yes, we have a dedicated financial planning team. Just send us a hi. We redirect you there. It's one of the longest webinars that I have done. What is your advice on investing in US life settlement? Uh, I don't know what it means. Do you want to stay in the US or do you want to come back from the US here? If you have a 401k that you want your 401k to get reviewed, just send us a hi again. We will redirect that to the financial planning team, and they will tell you the charges and how they can help you with the 401k. Is it an alternative investment? No. Depends on the cycle. Do we need to continue investing in PMS? Yes. If you're already doing a PMS, then whenever you get that option, so if you're on iThought PMS, you will always get calls from our side, from the sales team, from the internal central number, that now is a good opportunity to add to your PMS. And the beauty of our PMS is that it depends on the level of participation. So the more you participate, the more we're able to scale up on existing ideas and add newer ideas. Right. And we have that option to do SIP also on our PMS products. Right. So if you're already doing a PMS, yes, continue keep doing your PMS unless and until you have to build for contingency or you have to have like a short-term proxy. Then you should look towards doing somewhat of a uh, debt sort of an approach for on the mutual fund side. PMS is a portfolio management service. You speak about India equity sectors, but some mutual channels say that you should also think about any other equity markets. Does I thought also invest in? Yeah, Sphere already is investing in other equity markets. Sphere PMS takes advantage of it. So PMS we can take advantage of it. So we are taking advantage of other equity markets also. It's more on US, Canada, and other Asian countries also. not Japan or something. It's not specific, but it has an investment rationale towards investing in global markets as well. Oh, thank you so much. Thank you so much for showing patience and support on a Saturday afternoon. It's almost lunchtime, and you've been a great audience. I think we've had a lot of participants that came in. So thank you all for your support. Do keep supporting us on Milestones2Wealth. We will have more webinars coming in. If you follow us, you will get a lot of notifications. So subscribe, and you'll get a lot of content. But nutshell, it's not going to be same. Investing is not going to be the same. So you have to change your approach. You have to change your mindset. Luckily for you, we have. If you're on Milestones to Wealth, we'll help you change your particular mindset. So don't worry much about it. We'll take care of your behavior. If you're not on the program, send us a hi. Get on the program now. Get onto the program, and then we will be able to do what's best for you, tailor made for you. It is nothing that you will get from abroad. Tailor made for you. Right. So thank you so much for your time. Have a great weekend ahead.